it's undeniable that the company is beating the odds, and certainly beating the expectations from critics who believe that there's a bubble. But the question now is, can it continue growing apace?
Joining me again is Natasha Bernal, Senior Business Editor at Wired. Thank you for joining me.
Thank you for having me.
After yesterday's incredible report from Nvidia, I wanted to just cover how it blew past its targets, hitting 62% growth year on year, I think a staggering 22% quarter on quarter. Like I said, we spoke yesterday a bit about what that might mean for the markets, but what are you hearing now? And also the obvious question, how might this report amplify or deflate the AI bubble that we've spoken so much about?
I mean, what a result, right? Yesterday we were talking about how there was potential for Nvidia to act as sort of a bellwether for the entire industry. There were analysts that were telling the FT that they were expecting a 6% swing either way in the Q3 results. And yeah, as you say, we're talking about a record revenue of $57 billion, which is up 22% from the previous quarter and 62% from a year ago. So Nvidia's done it again, basically. Pulled it out of the pocket. Don't really know how it's done that, except we do, because obviously it's in the figures. But it's a record-breaking year again for this company. It looks like if it does reach the projected Q4 revenue targets, they want to reach 65 billion. There was talk on the call that to analysts that it might be more than that. There's potential for it to be more than that. It's already, that figure is more than 3 billion, more than analysts were predicting it was going to happen. And that, this obviously it's had a huge effect on the market, right? There's been a big kind of upbeat sentiment. People have been buoyed by the fact that this company's doing so well, and it's sent shares for Nvidia up 5.4% in early trading on Thursday before the markets opened in New York. It's had a bit of an effect on the Asian markets as well, a lot better actually than in New York. So it has very much become a barometer for the health of the AI industry. And it's also not just lifted Nvidia, but it's lifted some other businesses that are linked to Nvidia. So CoreWeave was up more than 9% in extended trading. Nebius Group was up 8%. And we've got a lot of kind of knock-on effects that are going on in the market at the moment, as some of those fears over an AI bubble and what that might mean have kind of calmed for now.
So what sort of pressure does this put on Nvidia? You mentioned the fourth quarter. To how is it possible that they could reach that 65 billion target? But also, are we aware of any, shall we say, shenanigans that were going on with this market report, like rushing orders to get through to meet that bracket or anything like that?
Yes, so it's entirely possible that Nvidia would be able to reach 65 billion. I mean, why wouldn't it? It's done it so far. It's met the targets and surpassed targets that analysts have put forward. So 100% is possible for it to have a brilliant year, and for it to kind of continue riding the wave of interest from its partners. I think part of the reason why it's done this well this quarter is due to I'm looking at the figures and looking at what they're saying. It's due to the big deals that it struck. So you've got the 10 billion deal in OpenAI, which is equity in exchange for the AI startup buying between 4 million and 5 million GPUs over a period of years. You've got the 5 billion deal with former rival Intel, which would mean that they're going to team up to enable Intel chips to work better with Nvidia GPUs. It's taken a 1 billion stake in Nokia to team up to integrate its GPUs into Nokia's cellular network hardware. And it's also investing in the UK and in a load of startups. But interestingly, it's also gained a new player that hasn't necessarily worked with Nvidia before, which is Anthropic. Anthropic has agreed to run and scale on Nvidia infrastructure, initially adopting around, we're looking at 1 gigabyte of computer capacity with Blackwell and Vera Rubin, which is the new chip, their systems. When we look at the figures, and I think, you know, the nerdiest amongst our viewers might decide to do that themselves, and I do encourage you to do that. It's always a good fun. But a lot of the what it's telling is the debt, right? And a lot of people are concerned about debt and how much debt Nvidia might be racking up just through getting into all of these big deals, through investing in loads of infrastructure. It seemed very much like Jensen Huang was just writing checks left, right, and center this entire quarter. And so the concern is, how much debt does that mean for the company, and how quickly has it been able to erase some of the debt that it's had before? So looking at the figures myself, I was looking at basically $999 million of short-term debt, which is compared to nothing in the year before, and it's dropped its long-term debt from 8.5 billion the year before to now 7.5 billion. However, if you do quick maths on the back of a napkin, you'll see that basically it's even. So it's got a lot more short-term debt than it did before, but its long-term debt is going in the right direction, which is down. You're right about the sort of the backlog. So in its figures, Nvidia said that the record has had a record data center revenue of $51.2 billion, which is up 25% from Q2 and up 66% from a year ago, which means that it's doing extraordinarily well. Jensen Huang, the CEO, was saying that Blackwell sales are off the charts. Cloud GPUs are completely sold out, and that the demand is growing exponentially. He was quoted as saying inside the actual press release on the results, saying, you know, we've entered a virtuous cycle of AI, with an AI ecosystem that's scaling fast, with more new foundation model makers, more AI startups across more industries and more countries. And then he says, classic Jensen, if you've been reading and listening to his interviews, AI is going everywhere, doing everything all at once. He's been very vocal in saying there is no AI bubble. This is all, you know, the proof is here, the numbers are here, the demand is here. Shut up about an AI bubble. It's not a thing. So he's been very vocal in his opinion about that. And this very much shows just what a true believer he is in this being something that will just grow and grow and grow.
You mentioned of the Nvidia's 57 billion revenue in this third quarter, 51.2 billion was just data centers. Does that make you feel more confident that there is this high demand, or are you a little bit worried about the short shelf life of NPUs and GPUs and these chips, sort of driving us towards a point where there's going to be an abundance of chips that are kind of not the bleeding edge, so they'll be sold off and then kind of still there, and we're kind of heading towards a bit of a cliff on that?
Yeah, I mean, I think it is interesting that data centers represent such a large portion of things. And you're right, that could be a huge stumbling block for the company, not so much because of its own action, but because companies need to really figure out quite quickly where to get the energy and how to utilize the GPUs that Nvidia will be providing to them to the maximum capacity. And obviously data centers are being built very quickly, and everything is being rushed and pushed as quickly as it possibly can to kind of set up the infrastructure necessary. But those things can take time, and those are some of the biggest stumbling blocks for the business. If you have companies that are buying loads of GPUs that are not able to utilize them straight away, or having to wait for a period of time in order to maximize the capacity they're able to get out of them, then you're in a situation where there is a knock-on effect, right? You don't want to buy more GPUs because you don't need them yet, because you don't know where to put them. And that can be problematic for Nvidia. It's also interesting, I think, in terms of stumbling blocks for Nvidia moving forward, that Nvidia's representatives have previously made gloomy comments about the significant sales to China, about the fact that the company hasn't really got a fast successor to the really successful H2O, which is getting old by AI chip standards. China could represent over a 50 billion annual revenue opportunity. One analyst from Oppenheimer was saying for Nvidia, but at the moment it's zero. China has banned the sale of Nvidia chips. It's not clear when that ban might lift. And this is like the major stumbling block. We've had a US ban where there were concerns, there were security concerns over the potential for China to use Nvidia's chips to surveil Americans, and the same reverse thing has then been said by China. So Nvidia's kind of caught in the crosshairs. The H2O is a chip, obviously, with pared back capabilities, and the hope was that perhaps China might accept this as an alternative to Blackwell. Blackwell is still its chief number one chip, and you kind of want you want to see that stumbling block open up, I suppose, to especially into next year. I think, Q4 they've probably written it off, but hopefully the dynamic with China will open up more doors, because that could certainly slow growth for the business. CNBC actually did a fantastic analysis on the numbers. They noted that Jensen Huang pointed out last month that Nvidia had received $500 billion in orders for its current generation of Blackwell data center graphics units. And its next generation Rubin chips, which are set to enter production next year, which are orders that are due to be fulfilled by the end of 2026. Now, here's the cinch. The figure that they added, so $500 billion, it included revenue that Nvidia had already booked from Blackwell sales last year. So there is a little bit of a question mark as to how quickly they can get those into production, and what exactly the delivery timescale might be for all of these. And you and I have discussed this before, but chips in data centers have a shorter lifespan than those in gaming or those used for other things. So like, when you're looking at chips and GPUs, they have a lifespan of anywhere between, what people argue, 2 to 5 years. Some other people argue up to 9 years, but it depends on their use and it depends on their support. And Nvidia has a lot of inventory out there already, and the more inventory it has out there, the more support it would have to provide to existing GPUs, and also think about what the next lifespan is going to be for the ones coming up, and how quickly can it replace like for like. These are all questions that I certainly have, and I think people will have moving forwards. It's undeniable that the company is beating the odds, and certainly beating the expectations from critics who believe that there's a bubble. But the question now is, can it continue growing apace? And I think those are the things that could be the biggest stumbling blocks.
I mean, it brought me on to my next question, and short of obviously China, which you've already mentioned, where do you see demand going? Because we've mentioned before as well, MIT study, 95% of companies are not seeing returns on their adoption of AI. And then you've also got these data center deals which are being thrown around sort of week on week. Maybe, I think, at least by my perception, have slowed down a little bit of late. Is there a cap to how many data centers are going to be built? And maybe that demand starts to tail off. And once you sort of look all of this in the round, like where do you see that demand for Nvidia's chips and going? Can they keep the pace up?
That's such a good question to which I do not have an answer. I mean, allegedly there's endless amounts of potential for data centers. I mean, I imagine that there is only a limited amount of, places you can build them, but certainly it feels like we've not exhausted the possibilities of where things could go. I mean, you've heard of the Middle East deal that Nvidia has recently struck, to kind of build something with Elon Musk, to try and get a massive data center over there, and that's I guess one of the bigger examples of where there are new places to go and new opportunities for Nvidia to grow. I think though that when you think about like the situation with competition and things like that, it's more worrying to me, the interconnectedness between Nvidia and all these other companies, because they're quite fickle, as companies want to be, and there are a lot of competitors coming out of the woodworks, including Intel, which is obviously a chip maker in its own right, that could potentially come up with some rival technology. And although Nvidia dominates, I think the estimates are around 90% of the market, it doesn't mean that it's not going to face headwinds and that people aren't going to think about going with some rival technology. And that's where I think, the battle for the data centers might commence.
I mean, again, brought me on to my next question. We saw Nvidia, AMD pop up a little bit with a deal with OpenAI and some cloud companies moving into sort of making their own chips. And you also mentioned Intel, which again, to a bit of a lesser extent. I mean, to 90% of the market share, do these really pose any threat to Nvidia's market domination? Is there anything more broadly that poses a threat to Nvidia's market domination and it, more specifically its chip demand?
Yeah, I mean, Nvidia is just very well positioned. I don't think that they are not looking around and looking behind their shoulder and seeing what everyone else is doing, because you can't ever be comfortable, especially in this sector, because it relies so much on innovation. You're only as good as your last chip, right? And so I think you can't rest on your laurels, and you can't pretend like there aren't other people coming out to get your lunch and to eat your lunch. So the AMD, which is the second largest maker of computer graphics chip, it's targeted $100 billion in data center revenue by 2030. It's coming. It's coming. And it's not an unappealing prospect for other companies who might be interested in diversifying their investments. I mean, I think for a lot of the businesses that are working with Nvidia, it might be a bit of an uncomfortable situation to say, well, we all rely on the same GPUs, the same chips, the same provider. Are we comfortable with that? Perhaps not. Perhaps they'd want to diversify their portfolio. So this is obviously the Nvidia's closest rival in the kind of gaming computer graphics chips sector, but it has signed a deal with OpenAI for some AI accelerators, and then it's also got another deal with Oracle, both of which work very closely with Nvidia. So you can see this is not personal, this is business, but some of the very closest allies of Nvidia are also willing to work with other people and willing to explore other people and their different options. It's also unveiled a version of its Instinct line, which is aimed directly at the market that Nvidia dominates. So this is in 2023 that it first kind of shot across the bow and was like, we're going to go for this chunk of the market. Now it's going to launch a ramped up version, which is called MI450, which will be coming next year allegedly, and it's already been included in both of those companies, OpenAI and Oracle's plans. And the chief executive officer Lisa Su has certainly been I suppose portrayed as sort of coming for Nvidia, coming for Jensen Huang, but she has estimated that the market for her company's AI chips will be worth hundreds of billions of dollars. So certainly they've seen the opportunity there and they're pursuing it. And then Intel, which I know has a deal with Nvidia, is rebooting its attempt to try to gain a bit of ground on the AI accelerator market. It's got a new management team which is focused on raising cash. It doesn't have a directly competitive product scheduled for now or next year, as far as I'm aware. But it is kind of very plausible to believe that while it's teaming up with Nvidia at the moment, that it is working on something in the background in order to become more competitive and enter into that space later on down the line. And also the fact that it's working with Nvidia could be a massive boon for Intel, because they might learn some things that might be useful for them later on. So I think this is an interesting market. I mean, we've spoken before about the potential for like lighter weight models not needing as much capacity, which might kind of render this sort of big scale colossus of AI infrastructure kind of useless if you only need like one data center to do the things that you would need 100 data centers to do before. What you're going to do with the other 99? That could happen, but it's still very theoretical. Well, not theoretical, but it's at very early stages. Like there's not exactly anything coming to market aside from AMD that is like to the scale that you would expect to make a big difference to the infrastructure plans of these companies.
Well, Natasha Bernal, thank you for taking the time.
Thank you very much.